We become what we repeatedly do, Sean Covey. And my friends, we ask you to repeatedly do what we do every single day, and that is cover these markets. Spend 10 to 15 minutes with us. Fill out your daily market worksheet. If you're listening now, fill out the weekly market worksheet. If you're not a subscriber to chartingwealth.com, go sign up for free. Those worksheets are in your email that you receive from us every day with the video. It depends on the day. It could be the daily review. At the end of the week, it's the weekly review. Plus, there's a special training in there every day for you. The training today for free is dollar cost averaging, problems, and our solution. It's a great one. Now, let's jump into these charts. Stocks are up for the day. Bonds and gold down. Bitcoin up. Let's look at how the week ended. Red spinning top. Let me go ahead and move out of the way that two-period crossover. You can see that we ended almost with a doji. Lots of indecision, lots of movement up and down, but where things settled down on our Heikin-Ashi candlestick was, of course, pretty much a doji. Lots of indecision. It's a red one. That's what it shows. Price percent oscillator, still negative. We can see where things had moved up for 4 weeks and then really lost a lot of energy over the course of this last week. That derivative oscillator is positive, but price percent oscillator still negative. It is heading up a little bit. Let's look at what's going on the 2-day. As we looked at the week, we saw things starting out with the Friday-Monday candle on the 2-day chart going down. Things slowed down in that down movement on the Tuesday, Wednesday, and then the Thursday, Friday actually headed up and ended the week with a crossover going up on the 2-day. Now again, it had flipped over at the beginning of the week and then flipped back over at the end of the week. Again, that's what we get when we see this kind of sideways sliding down and then that bounce back up. But we will go ahead and mark that. Look at this though, the derivative oscillator still gaining downward momentum. That's because of the oscillations with the big down move on Monday that we saw, slowing down in that on Tuesday, Wednesday, and then sort of the recovery of that on Thursday, Friday. That derivative oscillator still gaining downward momentum on that 2-day chart. Ended the week with a big green up candle. Let's look at what we can see on the half day. This is where you saw things back last Thursday, the 15th, starting to move down, rolled over, accelerated down on Monday. And then since Monday, Tuesday, Wednesday, Thursday, Friday, things started recovering. And of course, have continued to push up to actually higher than where they were when they rolled over, going down. Derivative oscillator gaining upward momentum, price percent oscillator heading up. So again, we'll continue to see, even with the headwinds, remember how the week started with all the COVID fears, stoking all those fears again. And then what happened about midweek? We had a bad jobs report. But what happened? The market just wanted to go higher, so that is what it did. Nonetheless, what do we see? We see that we still have this divergence in effect, and we ended the week with regardless of what you see as far as that half-day chart, what you see on the big chart is, of course, lots of indecision, topping out, and again, potential problems as we go into the next week. So just keep your eye on things. Again, we'll continue to watch and see. Don't like this kind of flexing back and forth, particularly on our intermediate candle. But again, we'll be patient. We'll watch. We'll learn. We'll practice. And we'll see how this next week develops. What about the Qs? Qs is different. The price percent oscillator continued to gain upward momentum. The derivative oscillator heading up this week. Now we did see, again, a topping out higher as far as the upward wick goes. We have a red open box candle. It means a slowdown in the up movement. It does have a wick on the bottom. First bottom wick we've seen looks like going all the way back to the 28th of May. So again, a real slowdown there in that ascent. Now we look to the 2-day chart. We can see where it came close to crossing over, bouncing up and away. So again, green candle forming here. Again, continuing to move up. Look at the half day. And of course, you can see things bounded down on Monday, then slowed down Monday afternoon. That was Monday morning. And then, of course, that ascent Tuesday, Wednesday, Thursday, and Friday, like we saw in the S&P, moving up. And of course, things switched over on that half-day chart Thursday afternoon. So that's where we are on the Qs. Again, not as much downward pressure on the Qs, but as we look at the movement, we can see where things really paired off this last week. So maybe a warning shot, maybe just digesting those gains over several weeks and is getting ready to move up again. Remember, when you print a lot of cash, you change decimal points on a computer at the Fed, you can just inject all the liquidity into the market you can. What does that liquidity mean? Well, it means inflation. What happens when you have more money chasing the same amount of stuff? Well, of course, takes more of those. It inflates the price. And what is the stock market? Real things. So again, doesn't necessarily surprise us. We'll watch and wait and see and follow these indicators. Now, let's leave stocks, go to bonds. Bonds down for the day, 0.67%, but an up week overall for bonds. We can see they reached a higher high most recently, just continuing to move right up that weekly trend line. Price percent oscillator heading up. Derivative oscillators about flat. Slowed down a little bit, perhaps because of what happened oscillation-wise in the prior week where it didn't reach a higher high. This week, however, oscillating up quite nicely. We look at the 2-day chart, and again, we can see where we had a stutter over these last 2 days. Things really peaked on that Tuesday, Wednesday 2-day candle. This latest one actually recording a red down candle, wick on the top and bottom, price percent oscillator less than flat, derivative oscillator losing momentum for the last 6 days. And again, prices above that 2-day trend line, and above the weekly. But again, pay attention to that red candle. Look at what the half day has done. The half day, of course, ended up peaking on Tuesday and then rolled over. That was Tuesday morning, rolled over Tuesday afternoon, Wednesday, popped up a little bit on Thursday, and then sort of down and sideways on Friday. Price percent oscillator accelerating down, derivative oscillator gaining downward momentum. So if you're in that 2-day recross trade that has been very good to us, just continue to keep a sharp eye on this 2-day chart in particular. Overall, your weekly is still nice and strong, but that 2-day might pull you out quicker than the weekly and, of course, help you maximize your return in that practice trade. That's where we are on bonds. Let's go to gold. I've just been hoping gold is going to cross over going up. It's not. Derivative oscillator gaining downward momentum. Price percent oscillator slowly pulling away from the red signal line. Ended the week with what? And a very small open box red top. It was green earlier in the week. It turned red at the end. Pretty much a doji. And again, we can see the weakening there on the weekly. Let's go to the 2-day, and I screwed up just messing around with it just then. I screwed up the crossover. And what do we see, though, happening before I do that for you? We can see it is literally laminated. So it hasn't crossed back over going down, but it's getting darn close to it, which would be what? A 2-day recross going down. So we will be watching for that at the end of the day on Tuesday, because again, it's a 2-day candle. It'll have to draw on Monday and Tuesday. You don't use a candle until it does what? Until it actually is finished drawing. So at the close of the market, right there before the market closes on Tuesday, if you see this 2-day really accelerating over, price percent oscillator going down, that would be your chance to potentially jump into it. Now, we like it when the price percent oscillator and the derivative oscillator cross over in the same direction going down. But if you're getting ready to put in a put trade on Tuesday, then of course look at all of these things, note them in your trade worksheet, and make sure that you are getting the full learning experience. That's what the trade worksheet is all about, and we have great instructions on how to fill out those worksheets. If you're not filling out the worksheets, you're missing half or more of what we teach and what you should be learning. So that's where we are on the 2-day, half day. Again, it is just continuing to move sideways a little bit, down, up a little bit, sideways, down. And again, like we said for the day, down 0.31%. Price percent oscillator heading down. Derivative oscillator a little less than flat. That's where we are on our 4 big charts. What about Bitcoin? Bitcoin up for the day, 0.97%, but overall a down week. And again, hitting a most recent lower low of 29,000. The prior low had been 30,221. This was 29,659. Price percent oscillator heading down. That derivative oscillator, the leading indicator, still losing downward momentum. And you can see price did push through that 50-period moving average line today. We ended the week with the first green open box candle we have seen in a long time, going all the way back to the 17th of June. So that's nice to see. Price percent oscillator has been sort of going back and forth. It has pulling away finally a little bit from the red signal line. Derivative oscillator still negative. Half-day chart, we can see that we've had 3 days of nice up movement. That's good to see after things really pounded down on Tuesday. Well, Monday and Tuesday reaching that most recent low on Tuesday. So again, you're interested in Bitcoin, follow it with us every day. What will we see happen? Well, if we've reached the bottom and the 2-day continues to gain energy and move up, at some point, it'll take with it the weekly. And of course, if you look back on that last weekly crossover that we had at the $12,000 mark up to a high before we had the crossover going down, didn't capture all of that gain, only $59,000 at the high. Again, not saying that you would capture all of that regardless from 12 to 59, but my gosh, you should have captured some of the chunk in the middle, right? Would have been quite sweet. That's where we are, folks, as we end the day. God bless. All the best from the whole team at Charting Wealth World Headquarters. If you don't have our book, Charting Your Way to Wealth, you're missing half the picture. God bless, my friends.